If you're looking for a professional day trading education, high level trade analysis, and dissection, you have come to the right place. My name is Pat Mitchell. I have been a professional day trader for the past 11 years, and I'm here to bring you exactly that professional day trading education, all here for free on YouTube and on X. And tonight we're going to be going over one specific trade that I took, absolutely took down Qs for roughly about 150%, definitely over 100%. And we're going to go over it. We're also going to be talking about how to enter into a protected trade and what that means exactly. So stay tuned for that. So let's rock and roll, folks. I hope you all had a wonderful day. Give me one sec as I grab my charts. I know we certainly had a great day. Let's do this. One quick sec. Hey, what's shaking, folks? Okay, guys, let's get into it. So for those of you that are just joining us, you're going to see a bunch of levels, blue lines on these charts. And what this represents is essentially these levels are technical levels. They are struck prior to the market open. It's not signaling high of day or low of day or ranges that have tested. These are all struck 30 minutes prior to the market open. And then I develop trade plans surrounding these levels with contingency plans. So if something doesn't work out, we have a way out of that position. So SPY was an interesting trade. Now, I preferred SPY on the long down here at this level, and it did get a nice bounce. But I really preferred the short on Qs. That's really what I was looking for here this morning because we opened up very close into it. And this is going to be our focus of topic of conversation here. So I'm going to zoom in so that you guys can see this. So here are the entries charts, smoke those lows, and I'm going to talk about that more so. And then also, I locked in $10,672 on this trade. Now, I'm going to blow this up so then you guys can see it really well because this is more of a video lesson opposed to a trade recap and trade analysis. But we're obviously going to be diving deep into this trade. So let's talk about this. So what is this level? Well, technical levels are valid levels that we are going to enter in for a short or a long. Now, this level is extremely valid because it is a gap fill. It's a major gap fill. It's not just an average run of the mill gap. Okay. Now, when we have these areas, and that is the previous close, that is where it found its close when it tested and made new all-time highs. There are going to be a lot of eyes in that area that tells me it is going to be used as a target. Okay, so a lot of this boils down to it's not just entries and technical levels. It has everything to do with psychology, trading psychology, day trading psychology. People will use these valid, important levels as targets. Okay, and that's what this is. That's mainly used as a target. So what are targets? And forgive me if you already know what a target is, but trust me, this will make sense as I'm peeling the layers back. Targets are used in positions that you are long, wherever you're long from, to sell into. So what's going to happen when you sell? Well, it's going to create that selling pressure. Okay, you're going to have walls of resistance there. You're going to have walls already set, orders already set that it is going to basically, it might hold there, which it did, but every time it touches that level, orders are going to get filled. That is the definition of a protected level. And when we have these protected levels, I'm going to take advantage of that. Now, on positions like this, I don't use small size. Okay. I go in, and every time it tests that level, it touches it coming into that level, I'm going to add into that position. And there's a reason for that. Because it is used as a target, I know that that volume is going to get sold. Every time I put volume in, it will get sold. It's going to be high volume and very liquid at that level. And you will, mark my words, you will get a reaction at that level. Now, was I expecting it to come all the way down here with very little retracement? No, there was a lot of follow through. But what I am expecting out of this trade is that level there. And I know I kind of veered down a little bit, but right there, that's the level. So I know that I can get it right from this level down into there. It has to find support before it breaks through this important level. Okay. So if I know that, I can put in a large position every time it tests. Every time it touches that level, I'm going to add into it, which I did. That's what that entry chart shows. And I will get a reaction there. That's what I'm looking to get out of that position. Now, some of you may be looking and it's like, well, that's not a lot. Well, you're missing the point of this. You're looking for trades with high odds of success. You don't want to put your money in. Like, I think one of the reasons where it can be a little hard to digest some of this information is when you're really new and you're trading with a really small account. Because when you're trading with small size as a new trader, you're expecting to make money out of that. But the problem is when you're trading with a limited amount of shares or contracts, you're not going to make fucking money. So what people end up doing, traders or new traders end up doing, is they need range to make that money. And that's why in positions like this, instead of paying yourself into that first natural area of support, they're going to hold too long. Now, this isn't a day that usually happens where it rejects a level and sells straight off like that. What usually happens is market opens up, pops up into this level, comes down here, and it's going to piss around, right? And even if it came down a little bit lower, right? So market opens, it pops up, it comes down here. People aren't selling into that next level of support. And then it comes back up and they end up selling their position with either minimal profits or for red because they are emotional in that trade and they don't know what they're doing. They're not trading into targets. They're not understanding. And it all boils down because you're trading with a small position and expecting to make money. When you are a new trader, it is not about making money. It is about proving that you can be responsible and have your emotions under control and the discipline to execute a trade and work it into a target. Okay. You hear traders talk about targets all the time, but do you actually use targets? Do you know how to use targets? And the answer for the most part is no. And the reason why I can say this is not me being an asshole or being a jerk off. It's because I've worked with tens of thousands of traders, new traders, and I see this sort of stuff all the time. This is one of the reasons why I've developed these management and profit taking strategies that I share with my members, because that's what happens. Because they're trading with such a small and ineffective position, they're expecting to make money. So in order to make money, whatever idea of money that is, let's say you want to make $1,000 in a trade, because I hear people talking about making $1,000 a day all the time. They don't make $1,000 a day in their regular 9 to 5 job, but they're expecting to do it in one of the hardest career paths on the planet, which is fucking retarded in my opinion. But what they end up doing is, let's say they want to make $1,000. In order to make $1,000 in a really small position, they're going to need it way the fuck down here. And that's what happens. And I've seen traders entries, they'll enter here and they'll hold all the way down here. And today they would have got it, right? So they'll give themselves a pat on the fucking back. But in actuality, they traded like absolute dog shit. That's a horrible trade. It's horrible. It's like something like that. I would absolutely bark at a member for doing something like that, because it shows greed. It shows that you're not listening to instruction. It shows that you're just trying to make money instead of earning the right to size up. Okay. We need to practice trading into targets, executing, paying yourself, executing, paying yourself, and that's it. Once you prove that you have the discipline to manage a position properly, that's when you can increase your size. And then on that first wash, okay, so you see a real small window of opportunity. It's very small, right? It's only this. So before it broke down on my position, I'd already locked in about, I think at that time it was about $4,000 or just under $4,000, just from there to there. So in time, you will be able to make a lot of money with a limited amount of range. And that's what it's about. But I've proven to myself that no matter what, I will pay myself into targets. Okay, so that's kind of paying yourself. Now, I want to talk a little bit more so about that protection because that's kind of the biggest idea or biggest lesson of tonight's video. These protected trades, what a lot of people will end up saying, and again, because I've worked with tens of thousands of traders, I know the question that they'll ask. Well, what happens if it keeps coming up? So what? Right? Like what you're now living in is a world of what ifs. So let's say the market opened. Let me fix this. Market opens and it comes higher. So you start into that position and you're in a protected trade. Your maximum risk in that is up there. Now, is that wide? Yeah, but it's about a point and a half. It's not a lot on a $635 stock or ETF, right? That's its maximum. It will not, because it's unnatural movement for it to do anything other than this. If it were to open, push into this level and keep going, your maximum will be here. It cannot keep going. There's too many sell orders up at all-time highs or that previous close on that all-time high test day. Now, you have to remember, folks, like this is where experience comes in. And it's one of the hardest things to really work with when you're a new trader is because you haven't seen enough of these trades unfold. Like how many times have you seen an all-time high trade test? So let's say you're only been trading for 6 months. Maybe you've seen that happen once. Let's say you've traded only for a year or two. You've maybe seen that test a handful of times. This is why trading takes as long as it does, because you need a collection of all of these tests of different levels and how it reacts into these levels. If you're a technical trader, this is why you see the type of consistency that you do on this channel, because I've been doing this a long time and a lot of people will discount experience. So when I'm telling you from this level here, that's your entry up to your maximum risk of right there. That's your risk. So really, it's less than a point and a half. It's more like a point and a quarter. It's not a lot of risk on this. That is your maximum. It cannot open here, blow through a major level of resistance, and then blow through a secondary major level of resistance. That is unnatural behavior. It won't do that. Can it do that? Of course it can, but that's not what I'm saying. It won't do that. It can't do that. The odds of that happening, you're talking about very slim odds. And that's what we have to deal with here. So we're dealing with odds, right? So anytime it tests that protected level, I am absolutely going to continue to add in and acquire a size of a position that I want to acquire in such a banger of a trade. Now let's talk about what if I acquire size in this trade, but yet it ended up coming higher. Well, I'm never, and this is the difference between a professional and someone that is trying to achieve consistency. I will never oversize in that position here because I'm always thinking about what if it does go here? Because if it does go there, I need to be comfortable with adding in to correct that trade because that is my risk. Okay. So that's the difference. I'm never adding in, although that was a large position, I'm still very comfortable with it coming to here. Why? Because of what I just said. It can't open, blow through this resistance, and come up and test that resistance and keep going without a pullback. It won't do that. It can't do that. It's next to impossible for it to do that. The level of manipulation that would have to happen in order for that to happen, it can do that, but it won't. It's like, you're probably talking about for it to go into this level, blow through, come into that next level and blow through and keep going and stop you out in a position like this, in this exact scenario, you're looking at probably 1 to 5% odds of that doing that. Now, I don't know about you, but I don't live my life on 1 to 5% odds. That's like never crossing a street for fear of getting hit by a vehicle. That's never jumping in a car and going for a drive, right? Like, do you understand? It's like never riding a motorbike, never riding a bicycle, never doing anything, never walking. Don't walk down the stairs because there's a 1% chance you're going to fall down and break your fucking neck. You know how stupid that is? Like, and that's what people will end up doing when they're really new to trading. They're not really thinking about the odds of this. And then they get spooked out. They don't take this trade. And then once it starts selling off, they'll take a real bad position and they'll end up losing. Well, everyone else is making fucking money. So if you're one of those traders, it's time to actually start learning how to do this properly. And something that another lot of new traders shy away from is working with a coach. And it's like, I get it. I understand the amount of bullshit and insincere scamming pieces of fucking human trash that are out there. I get it. I understand that. You probably have been fucking completely fucked before by some of these people, but I've been doing this a long time. Nothing's ever changed. It's been what, 7, 8 years on YouTube. Go back and take a look. Nothing's changed. My strategy has always remained the same. Everything has always remained the same. I've never changed anything I've done because this is what works. So if you want to work with someone that can actually get you there, come to Trick Trades. If you don't want to do that and you want to fight me on that and you're going to try and go it alone, that's why my stuff is on YouTube. Watch the YouTube channel, but I'm warning you, it is going to take you a fuckload of a way more time in order to put these pieces together. And I will quickly explain why, because people get confused when I say that. Every video that goes out, there are videos that are beginner trader videos. There are videos that are novice trader videos. There are professional, intermediate, expert, all the different levels of a trader. That's on a channel. That is on this channel. So I can do a expert level. Tomorrow I'll do a beginner level. And then now you've got to try and put these puzzle pieces together. And I'm not telling you every time it's a beginner or an intermediate, or I'm not telling you all of that because I'm just doing a fucking video for you. This is free shit, right? So if you want proper coaching, come to tricktrades.com. And if not, that's up to you. That's completely on you, but you're going to fucking spin your wheels. I'm telling you, this isn't something you should try and attempt to do on your own. You're going to blow up. You might get lucky a few times. And I've seen people get lucky, but this is a game of infinite consistency. You need to be consistent in order to keep those gains. It's not about making money trading, guys. That any asshole can do it. It's easy. I've seen tons of people come and go. They make a ton of money and then they lose it all. But can you keep it? Can you remain consistent in a difficult market? That's the hard part. And that's what I help with. So on that note, folks, I hope you all have a wonderful evening. I'm going to see you guys tomorrow, and we'll see you then. Have a good one, guys. Adios.